What's up today? So let's do a complete updated multi-time frame analysis on gold. Let's see what kind of trading opportunity currently we have in this instrument. Now gold, as you can see on the lower time frame, giving us a significant trading opportunity. Now, before we discuss how we can trade, let's look at the bigger picture to see the general direction in the market, and then we'll jump onto this lower time frame to see how we can trade gold. Looking at first of all monthly perspective to see overall picture in the market. Now, from the monthly perspective, we see that gold starting from this monthly level of support, there has been a significant movement to the upside. Quite a few months back to back 3 months, we have seen that there was a strong bullish move. Now, after this kind of move, what we can expect now, a significant retracement. Now, with that said, this month we saw that gold has broken the monthly high, created an overextended market to the upside, and then immediately has come back down. Now, what we see that primarily in the first move, gold has retraced 38.2% Fibonacci level, and from that Fibonacci level we see that gold has a primarily bounce. Now with that bounce, what we see now on the lower time frame, the sellers is still selling this market, and we could potentially see another attempt for the sellers to sell this market, and it looks like that gold might coming back down to this 50% Fibonacci level, which is also aligning with the monthly 20 period moving average. So that means that we could potentially see another wave of drop on gold to this level to complete at least a 50% Fibonacci level. If we look at the weekly time frame to see how the price actions form, now from the weekly, the previous week created this bearish candle. Now this week, what we see that the buyers tried to push the price high, but instead what we see that gold basically is now rejecting from this previous resistance zone, turning previous support zone, turning resistance. Now as you can see, there is a doji here on the weekly, which is very significant, as after this long bearish engulfer followed by a doji, it's a continuation pattern. Now as a result, we saw that previous week there was in fact a long bearish candle. Now this week we saw that the buyers tried to push that price high, but instead, as because there is a strong seller, now we see that this market again started to drop. That means that because it started to drop, the sellers took control. Now we can expect another push, at least primarily to this weekly 20 EMA zone, or even creating a lower low in this direction in the first move, or even coming back to this 50% Fibonacci level from the weekly and monthly perspective. So with two other time frame on the monthly and weekly, we see that gold is bearish. Now looking at daily, what we see that after the previous days doji, this is the daily doji that formed yesterday in a low volatility market. But what do you see that in fact the buyers tried to push the price high after this rejection from this bottom on the daily. After this pin bar, we saw that there wasn't enough response from the buyers, instead created a narrow doji, is the sign that this market is still bearish. Now if you look at overall daily market structure, starting from this impulse, we saw that back to back two strong drop, 2 days long candles, and then followed by narrower and the smaller green candle with a long wick at the top is the sign that there's a lot of sellers. So from the price action and market structure perspective, we see that stronger red candles, weaker green candles is the signal that this market is preparing for another drop. So you could potentially see that gold has another wave of drop. At least in the first move, we can expect to this daily support, which is also weekly level of support, and monthly 50% Fibonacci zone. So with that in mind, on the lower time frame, now let's see how we can find trading opportunity. Now this is the current session candle on the 4 hour, which we see that is still almost 2 hours remaining on this one. What we'll be waiting, if you closely look at in this 4 hour time frame, we see that there is a head and shoulder has formed, and the price has broken down from this head and shoulder. Now if we draw a neckline, a support zone of this head and shoulder, we see this is the support here, acting here as a resistance. What we can expect during the lifetime of this candle, we'll be waiting for a reversal to the upside, which is highly likely to happen, and especially in this 4 hour 20 EMA zone, or even nearing this level on the lower time frame, can give us a potential entry opportunity on gold to take this move to the downside. As soon as we will find suitable entry, we will consider going short with a high probability trade setup with our students. And if you find value in this analysis, then smash the like button and also let us know in the comment section which way you are trading gold. Thank you. I'll see you soon in my next analysis.